fundsupermart.com.
How have Asia and Malaysia bonds performed year to date, and what are the associated reasons?
In terms of this year itself, we saw the Malaysian bond market actually strengthening a lot more. If you recall last year's sell-off in November, the 10-year was then about 4.4, now it's about 3.85, 3.9. So we believe generally the Malaysian bond market has performed. Apart from Malaysia, we also saw the improvement in government bond market in Indonesia, where Indonesia declined about overall year to date, it's about 115 basis point. So we continue to see traction or demand coming from Malaysia as well as Indonesia from a foreign perspective.
What is your outlook for Asia and Malaysia fixed income space for the remaining of 2017? What kind of returns can a fixed income investor expect?
For Malaysia, we're still positive, generally because the interest rate in Malaysia has been quite stable. From the official number, OPR, the overnight policy rate remains at 3%. And we don't think that there will be any change in terms of the OPR for the rest of this year. So if you're talking about investment in bonds, it still remains conducive for investors. And we particularly like corporate bonds as well. The investment grade corporate bonds, the AAA and AA space, because they will be able to give you a higher yield pickup than putting money into the fixed deposit. So that will foresee demand both from the institutional and the retail. That's why these bond prices should do well. Yeah.
Ringgit was the best performing currency in the recent quarter. Should investors reduce their foreign bond exposure, as the strengthening ringgit might dampen investors' total return?
If they have already in foreign bond investments, then there's a possibility with the strengthening of the ringgit, you get less in terms of ringgit when you exchange back into ringgit terms. So that's one of the risks when you take on an FX exposure when you invest in foreign bonds. But having said, you can also hedge off this risk by entering into a forward hedge, where you are actually able to hedge your position to avoid unnecessary currency loss from this change in exchange rates. Yeah.
With regards to the Malaysia fixed income segment, how much upside do you see, and what are the potential drivers over the next 2 years?
For Malaysia fixed income, because the domestic bond market in Malaysia is actually quite strong, so we actually foresee continued demand coming from the bonds issuance, where we actually continue to see infrastructure bonds like your power plants, and then now they have also a new sector which they are issuing. It's in the solar power space. So this year we already see about 2 to 3 issuances coming from there, and because the demand for infrastructure is still strong, so these are the bonds that will still be demanded by the retail and institutions. And institutions generally, because they have so much liquidity within their funds, there will still be net buying of these bonds. So this year to date, we saw healthy issuances, and the record of these issuances has also been taken up very, very well. Yeah. So we see more traction in the bond space in these sectors.
What countries and sector are you positive in Asia?
Positive in Asia, there will be 2. In Asia itself will be Malaysia and of course Indonesia. Malaysia because we have a cheaper currency now than last year. So in terms of global investors having an emerging market allocation, they will also look at Malaysia because we have relatively a cheap currency. So if let's say our ringgit rebound and all that, they will gain from the FX as well as the bonds. And then in terms of yields, we're also much higher than the US, so that's one of the selling point. The other market in Asia that actually does bode well is the Indonesian bond market. Indonesia is because it continues to have a relatively high yield, and the recent upgrade this year from below BBB to now BBB minus is actually quite good for ASEAN itself, because you actually see global investors who has a mandate to invest in investment grade. Now they can go into Indonesia bonds. Yeah.
What is the one advice investor can take away from for those who are currently invested in the Asia and Malaysia fixed income segment?
For Asia and Malaysia fixed income segment, if you're looking at credit, that means corporate bonds, you need to have an understanding of a sound understanding or a strong credit acumen of what the corporate bonds are about. You need to go through, I mean, what is the company, how are their cash flows. So these are something that requires a bit more professional advice. So that's why credit is a very important part in your bond investments. But if you're talking about low risk investments like your government securities, MGS, and then government investment issue, which is the Islamic Malaysian government securities, then your view on interest rates is very important, and the view of the market yields is also very important. These are the ones that actually gives you the active trading and is the alpha that you can want for your portfolio. So, so we have corporate bonds yield for the yield enhancement, and then the other part where active trading will be coming from the government bond market. Yeah.